Hello and welcome to Morning Brief Market Sunrise. I'm Allie Canal, live from Yahoo Finance's studios in New York City. It's Friday, October 1st. Happy Halloween. And coming up on today's show, President Trump heads home after his high-profile meeting with China's Xi Jinping. But Xi is staying in South Korea for talks with the leaders of both Canada and Japan. Plus, Nvidia strikes a major deal in South Korea, supplying hundreds of thousands of AI chips as the country pushes for sovereign AI. And Apple and Amazon shares are surging this morning after strong earnings capped off a massive week for big tech. Amazon alone added roughly $300 billion in market value on the back of its post-earnings rally. We'll break down what's behind those big pops and what it means for the markets heading into the weekend. Stay with us. This is Market Sunrise. Well, stocks look set to open mostly higher this morning. The Dow trading flat, but S&P futures are up about 0.6%, and futures tied to the tech-heavy Nasdaq gaining just around 1.2% after strong results from both Apple and Amazon. And there's plenty more driving the agenda this morning. Let's get to the three things you need to know today. First up, President Trump has left South Korea after his, quote, amazing meeting with China's Xi Jinping, but the diplomacy continues to roll on here. President Xi is staying put for the APEC summit, meeting with the leaders of Canada and Japan amid weak Chinese factory data that underscores just how much tariff pressures are putting on the world's second largest economy. And while China grapples with that slowdown, Nvidia is turning the page. The AI giant just announced a massive deal in South Korea, supplying 260,000 AI chips to the country's biggest companies. That includes Samsung, SK Group, Hyundai, among others, as Seoul doubles down on its push for sovereign AI. This is Nvidia's latest play to expand beyond just China and to solidify its position as the essential supplier in the global AI arms race. And speaking of tech, it's been a big week for the Mag 7. Apple and Amazon both moving higher in pre-market trading after strong results, adding to the week's earnings fireworks from Alphabet, Meta, and Microsoft. So let's stick with big tech and bring in Yahoo Finance's tech editor, Dan Howley. And Dan, what a week it's been. So many earnings, so many headlines. And before we get into some of those Mag 7 results, I want to start with the Nvidia news out of South Korea. Just how significant is this move? And what does it signal about Nvidia's strategy really outside of China?
Yeah, I mean, for Nvidia, it's obviously a big move. For South Korea and the companies there, it's a big move. Obviously, we have Samsung, Hyundai, SK Group. That includes SK Telecom as well as SK Hynix. This, and then obviously the Korean government and some of the research institutes that they have are receiving some of these chips. So it's a huge deal in hundreds of thousands of GPUs, whether that's Blackwell standard or their other Blackwell chips, the Pro chips that they have. Those are all going to South Korea. And I think, for Nvidia itself, it kind of continues to push this narrative that they've had of sovereign AI, where a nation state is able to start building up its own kind of supply of graphics cards or GPUs and build out their own AI infrastructure. And so, it's a big deal for South Korea. It's a big deal for Nvidia. While China is still kind of, not blockaded, it's blocked to a degree where they're not allowed to send their chips over there just because China's not allowing them to come in. They are expanding globally. And so it's not necessarily that, they're finished or anything along those lines with China. They want to be there. During GTC DC, CEO Jensen Huang had talked extensively about how the U.S. and Nvidia need to be in China, saying that they have 50% of the world's AI developers. But while they can't get there right now, they do continue to push this sovereign AI concept, setting things up in the Middle East and Europe and now in South Korea.
Yeah, and we were just seeing Nvidia shares up around 2% in pre-market trading. Also moving higher today, Amazon up massively, nearly 13%. I mean, what did investors like so much about this report? Was it all tied to that cloud business, AWS?
Oh, yeah. I mean, one of the big things that was, I think, stuck in Wall Street's craw about Amazon leading up to the announcement was the fact that there wasn't much clarity as far as how AWS is benefiting from AI. They also just simply don't have the kind of AI, one shot that Microsoft does with OpenAI or that Google has with Gemini. They have Anthropic, Amazon, but they split that with Google. And while they did announce that Anthropic's going to be training their models on 1 million Trainium 2 chips, they also announced that Anthropic also announced they're going to be doing the same thing with Google's own TPU chip. So it's still kind of up in the air, but I think the big deal was the fact that AWS reaccelerated. They were originally Wall Street was looking for about 18% growth. From there, we had roughly 20% growth out of that segment. Big win for Amazon and AWS. They both beat on the top and bottom line. They also said that they're going to accelerate spending, continue to accelerate spending. They, like Microsoft, like Google, are dealing with the fact that they build the data center capacity and then it's just basically sucked up right away. And so they're positive on the outlook going forward for AWS itself and for the AI side. They also announced, interestingly, that their Trainium 2 chips, which they also rent out to customers, has turned into a multi-billion-dollar business. It's up 150% quarter over quarter. And so that's huge for them. They also finished their Project Rainier, where they have 500,000 Trainium 2 chips basically plugging away all the time. And so they now have that capability to rent out as well. So, it was just a slew of positive moves on Amazon's part related to AWS.
Yeah, and Dan, when you look back at this week as a whole, we also had results out from Apple, and then earlier this week, Microsoft, Meta, Alphabet. I mean, what's the biggest takeaway for you, especially when it comes to some of those winners and losers?
Besides the fact that I'm so tired from this, I think that
busy week for you.
Oh yeah, I think the biggest thing has got to be the the general AI spending. That has continued to increase, and it seems as though it's Wall Street is either positive on that or they're negative on that. When you look at Meta, for instance, shares plummeted yesterday as a result of the announcement that they're going to continue to they accelerated spending for 2025. They're going into their fourth quarter now, or they're currently in their fourth quarter. And then they said they're going to see meaningful acceleration in 2026 over 2025's numbers. Google said they're also going to push their spending higher. AWS, Amazon, Microsoft, those three did as well. But it really was kind of that push from Meta that seemed to leave a sour taste in investors' mouths. While when you look at what happened with Microsoft, with Google, with Amazon, it seemed to be taken in a more positive light because they discussed how they're all capacity constrained or they're dealing with capacity issues, and that as they build, they are able to kind of ensure that what they build is being used. Where Mark Zuckerberg during his earnings call kind of had a strange response to the idea of building out. It was basically like, we're going to build it, and if it's used now, great. If it's not, well, we'll take some losses, but we'll use it in the future at some point. And I think investors just kind of struggled with that concept of we're just going to do it.
Right. No, you need to see execution and tangible results, and that's probably the next wave of this AI trade. Well, Dan, thank you so much. Always appreciate your insights. And markets are not just watching tech. Geopolitics very much in play after President Trump's meeting with China's Xi Jinping ushered in a new phase of trade relations between the two countries. For more on that, Eurasia Group founder and president Ian Bremmer spoke with my colleague Julie Hyman. Take a listen.
I'd call it a truce. I would not call it a breakthrough. I think it creates more stability in a relationship that has had more stability until Liberation Day. It was then unilaterally destabilized by the United States, and the Chinese uniquely hit the Americans back as hard as they were hit, and were very credible. And that happened not only on tariffs, it also happened around export controls and licensing agreements. And the Chinese have a lot of leverage, and they have a willingness to use it. And so I think that President Trump went to meet with Xi. It was relatively well prepared by Scott Bessent on the U.S. side, by Premier Li and Li Chenggang on the Chinese side. It was a short meeting. It was only 90 minutes long. It was expected to be 3 to 4 hours. With translation, that means that it was really only a 45-minute meeting. So most of what was expected had already been discussed and agreed to. There was nothing on Taiwan, though the Chinese had floated it. There was nothing on Russia, though Trump had floated it. It was really just, hey, let's make sure that we don't have a boycott. We're not in a trade war. And so in that regard, it was kind of table stakes, close to the minimum you could expect to stabilize the relationship, but long term, still looking at a trajectory of decoupling and still looking at a global environment where the United States and China are adversaries and are working to take advantage of their position vis the other. And that I think that's really important, right? When the Americans are trying to take Chinese transshipments out of other countries, trying to coordinate rare earths and AI and chip and national security away from China. Those are the trends that are still happening, even though I know Trump said that the meeting was a 12 out of 10. It's even better than Spinal Tap. It's even farther than 11. That's just not true. It just ain't so.
Well, gold holding near $4,000 an ounce as traders weigh a new trade truce between the U.S. and China. Ben McMillan, Chief Investment Officer at IDX Advisors, joined Yahoo Finance's Market Domination to discuss the outlook for gold, which is up more than 50% so far this year. Let's watch.
I think it's helpful to kind of zoom out and look at what contributed to this, huge rise in gold in the first place. I think when we spoke earlier this year, it was really about central banks being the marginal buyer. And of course, they've come out since COVID. They've really upped their purchases. Believe it or not, in Q3 of this year, the demand for gold was the highest it's ever been in recorded history, 1,300 tons. And the big new buyer now was ETFs. So that's institutional buying, that's retail buying. Physical demand is huge. We're seeing lines for gold bullion in places like Costco and things like that. So my point is these are structural kind of generational tailwinds, leading gold higher and higher and higher. But when it rises that quickly, that fast, there's always going to be some technical pause, especially when we see something like interest rate expectations shift like they did yesterday.
So would you see this, Ben, as okay, this is a pause in a broader secular rally? Is that how you'd frame it?
Absolutely. So the question now is, all right, well, does this kind of a consolidation sideways? How does it trade down? If so, to what degree? So we're really looking at technicals here. We're seeing a lot of dip buying, below $4,000 an ounce, which I think is healthy and instructive. I think the big question now is really about the economy. If we see a recession, we could see gold retest, maybe 3,800, 37 down to 36. But again, you're going to see big institutional buying come in there because remember, the central banks, these institutional buyers, these physical buyers, they're buying and holding. For them, it's not a trade. It's a confidence vote on fiat.
In terms of your price ranges, here I want to put this number in front of you. Goldman Sachs, all right, here's what they're telling clients. They say they see gold hitting 4,900 by the end of next year. What do you make of that?
I think that's very likely.
You do?
We're on that train. We think it's probably hard to see how it doesn't hit that. We'd have to see kind of a huge spike in interest rates or something really structurally change. But again, this is part of the kind of currency debasement trade. And again, when we spoke earlier this year, it was really central banks were selling treasuries, buying gold. For the first time now, central banks actually own more gold than treasuries. But now that trade, so to speak, has kind of shifted into Main Street. And again, that's why we're seeing physical buying. So this is a generational secular trend here.
Well, sticking with central banks, though, you heard from the Fed. Now, they gave you the cut, but then Powell comes out and says, well, that December cut, that's no sure thing. Far from it, I think he said. You watched that and thought, okay, the impact on gold is what there, potentially?
Well, the near-term impact is negative. Right. Gold is competing for interest rates. But again, you look at Powell, and I think the question is, all right, to what degrees does that overwhelm kind of the structural demand shift that we're seeing? And in the near term, I think that is the risk. If we see the economy really start to slow down, that could weigh on gold. Powell, I think if you read between the lines, was kind of really concerned about inflation more than jobs. So that those will be the numbers to keep an eye on. But again, when we look at kind of the demand that's emerging for gold, and even you talk about know, I think Goldman Sachs, not just their price target, but they're now starting to recommend higher allocations to gold in 60/40 portfolios. It's not dissimilar to what we saw with Bitcoin, kind of quote unquote going mainstream. Gold is re-emerging as kind of the favored quote unquote alternative holding within 60/40 portfolios.
Coming up, all your market movers ahead, including key earnings from Chevron, Exxon, and Colgate. Stay with us. You're watching Market Sunrise. It's time now for today's trending tickers. Tech and media front and center this morning. And yes, even a little AI news from Taylor Swift's publisher. But let's start in South Korea, where Nvidia's latest expansion is already lifting tech stocks in Seoul. The chipmaker will supply 260,000 Blackwell AI chips to some of the country's biggest conglomerates, Hyundai, Samsung, SK Group, and Naver. The chips will power everything from smart factories and autonomous vehicles to semiconductor manufacturing. The chips will also look to expand what we already know with the AI trade at large. Samsung alone plans to deploy about 50,000 Nvidia GPUs for use in mobile devices, robotics, and new memory units for AI chips. Samsung shares are up over 100% this year as the company leans harder into artificial intelligence. And over in Hollywood, Netflix is on the move. Shares are up about 3% in early trading after the company confirmed a 10-for-1 stock split, saying that it wants to make its shares more accessible to employees. Also juicing the stock a bit this morning, Reuters reporting that Netflix is preparing a bid for Warner Bros. Discovery's studio and streaming assets. The company has hired advisors to help shape that offer, which would pit Netflix against Paramount Skydance in what's shaping up to be a Hollywood bidding war. And speaking of streaming showdowns, Disney's networks, including ESPN and ABC, went dark on YouTube TV overnight after the two sides failed to reach a new carriage deal before the midnight deadline. Negotiations over pricing are still ongoing, and neither company has said when service will ultimately resume. And finally, a different kind of music industry headline involving AI. Universal Music, the publisher behind Taylor Swift, Kendrick Lamar, and Olivia Rodrigo, has settled its copyright dispute with the AI song generator ODO. And in a surprising twist, Universal is now partnering with ODO to build a licensed, artist-approved AI music platform set to launch next year. And finally, a quick word on the pharma giants Novo Nordisk and Pfizer in a bidding war for Metsera, a U.S. obesity drug developer. This could define the next chapter in the weight loss drug boom, as Eli Lilly remains the incumbent to beat. And Lilly, for its part, has some big expansion plans in the works. The company's chief financial officer just spoke to Yahoo Finance's Julie Hyman about what's next. Take a listen.
Very strong performance for the quarter, growing 54% versus the prior year, and upgrading basically our guide for the full year. Your question about the GLP-1s and incretins portfolio, of course, is front and center of the growth that we have. But you mentioned we have a breadth of a portfolio. We operate in 4 big therapeutic areas, including immunology, oncology, and neuroscience as well. And all those products, the rest of the portfolio is actually growing double digit as well for the quarter. So we continue to make progress not only on the incretin side, but also on the rest of the portfolio. And we have a breadth of the pipeline. Dan alluded to this during the earnings call that is across all the therapeutic areas.
And, all of that said, yes, the obesity drugs did see very strong demand in the quarter as well. How are you thinking through that demand in terms of distribution, in terms of the patients that have accessibility to them, and where do you see future growth as a result of all of that?
Yeah, we operate, as you know, again, we launched in the US a few years ago, and now we are expanding the launches on all US markets. We mentioned during the call that we are now present in 55 markets with tirzepatide. So very excited that we are bringing this solution to all the patients around the globe. And we operate in different channels. Of course, again, front and center is how we continue to provide access to patients across the different channels in the US, Medicare, Medicaid, but also on the commercial front. And we continue to make progress across each one of the segments. In particular, very excited to see also what is our Lilly Direct portfolio that is direct to patients, direct to consumers, that we continue to grow extensively. This quarter actually grew 70% versus the prior quarter. So continue to see an acceleration of growth on that channel. That is an easy way to reach basically patients and go directly. As long as you have a prescription, you can get the product delivered at your home. We actually announced yesterday also a partnership with Walmart, that we are bringing this product as well, that patients can pick up the product at the Walmart store around the United States.
Some earnings movers out this morning. We're tracking Chevron, Exxon, and Colgate-Palmolive. First up, Chevron. Shares are rising after the company posted a strong beat on both the top and bottom lines. Earnings coming in at $1.85 a share versus estimates of $1.66. Revenue totaled $49.7 billion, also well above forecasts. The company gave credit to its $53 billion Hess acquisition, which closed in July for a big boost to production. Worldwide output rose to 4.1 million barrels of oil equivalent per day, and the company reported strong downstream earnings, up more than 90% year over year. And don't miss our upcoming interview with Chevron CFO Eimear Banner, her first broadcast interview that's coming up later this afternoon on Market Domination. Meanwhile, Exxon shares are moving to the downside even after the company posted strong results for the quarter. Exxon reported adjusted earnings of $1.88 a share, just above estimates, with revenue at $85.3 billion, also ahead of expectations. The company said its Yellowtail project in Guyana helped lift output to a record 700,000 barrels a day last quarter, but free cash flow fell to $6.3 billion, not enough to fully cover dividends and buybacks, a sign that heavy investments and lower oil prices are still pressuring margins. And finally, Colgate-Palmolive, those shares are trading about flat after the company missed organic sales estimates. The consumer products giant reported organic sales of just 0.4% in the third quarter, well below expectations for a 1.4% gain as volume declined across most regions. Earnings did come in ahead of forecasts at 91 cents a share, while revenue held steady at $5.13 billion. Colgate kept its full-year EPS guidance unchanged, forecasting organic sales growth of 1 to 2%, but did warn that consumer pressure and weak demand in Asia continue to weigh on results. Well, let's do a quick check on stock futures with about an hour and a half left to go until the opening bell here. You're looking at the Asian markets, a bit of a mixed picture here with the Hang Seng Index down. You have the Nikkei 225 up. And if we take a look at the U.S. majors, we are still seeing a mixed picture there. The Dow trading just below the flat line and the futures tied to the NASDAQ continuing to lead the way higher, along with futures tied to the S&P 500. But that'll do it for Market Sunrise. Stay with us for continuing live coverage of the markets and all of your money moves that you should be keeping track of all day long. Coming up, Julie Hyman gets you ready for the market open on Morning Brief. I'm Allie Canal. We'll see you next time.